Half an hour away from the opens in Hong Kong, Shenzhen, and Shanghai. You're watching the China Show. I'm Yvonne Man with David and Glass.
Good morning. Our top stories today. Japanese stocks on the up while the yen drops as investors brace for Shigeru Ishiba's departure and the race to succeed him as Prime Minister.
Traders looking ahead to this week's U.S. inflation print after a weak jobs report boosted bets of a Fed rate cut this month. We are asking Stand Chart now why they see a 50 basis point reduction.
Right. It's also ahead here, China investigating its former top securities regulator Yi Huiman following alleged discipline and law violations.
And President Xi Jinping set to address a virtual summit of BRICS leaders with U.S. tariffs topping the agenda.
What issues when it comes to these markets, right? So the big news coming through over the weekend, we'll get to this in a moment, certainly, and what's next as it pertains to the Japanese political situation there. Prime Minister Ishiba, of course, is stepping down, what it means for the party, what it means for the overall foreign and economic policy. As you can see, the markets are moving ahead with this as far as equity markets go, and we're better by about 2% on the Nikkei. What is on the back foot, though, it's worth noting that the yen is not just falling against the U.S. dollar, it's actually down against every single one of its peers in the Monday session. So want to watch as we go into the thick of things right now. 158 on the 10-year yield, so we're down, we're better on the JGB space. The other big story we want to talk about is the oil story, of course, on the weekend. OPEC Plus agreeing to more oil coming to this market in October. Oil's on the way up. We are also looking at, that's not the right ticker, guys. Okay, we'll talk about that later. That should be your Shanghai crude futures coming online. I promise you, in about 15 seconds, we'll show you that. They're going to correct it for us very, very quickly as we look into the Chinese Open today. Right. Let's have a look, broadly speaking, at the rest of the markets, though. See, we are on solid footing as far as equity markets go. A lot of that is really down to what's happening in Japan. As you look at markets like Taiwan, not on your screens, like South Korea, it's really this recovery in the chip space, SK Hynix. You have Kyodo, of course, in Japan. We'll get into the NAND story in a moment later on, of course. Dollar is on the way up. That's really a lot to do with the Japanese currency as well. And, of course, 4%. Do we get there? Is that inevitable at this point in time? We talked about Stand Chart, 50 basis points to what they're expecting as far as a cut is concerned. As you change the boards, it's also worth pointing out, we talk about inflation's coming through this week. Core PCE at 2.9%. If the Fed does cut interest rates this month, it would be the highest inflation print going into a rate cut in over 30 years. Just keep that in mind, just given the juxtaposition of those two seemingly contradictory things. Suffice to say, we're looking at tech going into the Chinese Open today. The rally, of course, resuming 1.2% to the upside. And as we look ahead to the Open today, futures, you have the currency, the 10-year yield, and as promised, we probably have the Shanghai crude contract coming up on your screens very shortly there. We are looking at declines here. Of course, quite a strong movement into the close on Friday. And yeah, we'll see where we go as far as small caps go, because that's certainly one area of this market to watch very closely. Thank you so much. 2% to the downside on Shanghai crude. Yvonne.
Yep, certainly following what we're seeing, a bit of surprise there in that OPEC Plus meeting. And certainly one thing that we're dealing with here today, among other things, right? You mentioned Japan. There's a political confidence vote in France as well later on today. But here's our agenda for Greater China. We do have the president set to speak in this BRICS address here. Of course, this is the virtual meeting that the Brazilian leader had instigated as well, following the SCO, following that military parade. So certainly more details there. We have export and import numbers coming through from China as well to watch out for. So trade data certainly in focus. There's an MPC Standing Committee meeting as well. The tech rally, we'll see if that continues on Friday. We saw 1 day of correction, and then Friday, this rally basically resumed in China as well. We talked about the small caps as well. And Quelch Maltai, there was a share buyback there to want to note there. And of course, still watching the AI trade with Capricorn.
Yeah, I think we were up, if I'm not mistaken, 9% or 6% on Friday. That rebound that didn't last, well, the correction that didn't last very, very long. In fact, in a couple of minutes, Hao Hong will be joining us to talk us through with his take, and he doesn't think there's actually any material signs of a frenzy in the Chinese mainland market. Right. Top stories today, of course, we talked about Japan resignation there from Ishiba, and of course the Fed that conversation around will a 50 basis point cut, or will that resuming of the rate cut cycle just bolster a rally into year end here for equity markets?
Yeah, it's interesting, right? When you have Japanese markets are like, as you say, it's almost like nothing's happened, right? And I think the narrative...
It could be good news, in fact.
The narrative behind it is that maybe this delays the rate hike from the BOJ, given whoever is going to be the next leader is going to be dealing with a coalition that is basically does not have a majority in the lower house of parliament. So also one in which looks at more fiscal measures. So certainly maybe that could be the narrative why we're seeing this kind of response from Japan. But yeah, as you mentioned with the Fed, it's not a matter of whether they're going to cut or not. It's going to be 25 or 50. What's it going to be? Yeah, and I think right now what's priced in the market is about 28 basis points. It's certainly a little bit bigger than a 25 basis point cut. And, you know, I will sort of crowbar the China story into this, right? Yeah. And are concerns over a speculative bubble, and I think you can take your camp there, whether that's on point or not, might that limit the PBOC's ability to lower interest rates if that was in fact what's fueling this rally? Ultra easy monetary policy. It's a great piece from on the Bloomberg about this, right? Back in 2015, they actually did cut rates quite substantially there, whether it was 1 year or even just a triple R. Yeah. And it led to this whole kind of frenzy. So certainly they're a little bit more hesitant maybe this time around, given the fact that there are concerns about how this is going to be maybe a potentially sign of a liquidity-driven rally. So certainly that is one to watch. But I think the debate's going to keep going on about whether this is going to be sustainable or not for some time. But Hao Hong has some interesting commentary about that, right? Yeah, we'll hear from him in a moment, and that underscores the importance this week of inflation reports. U.S., and you have a Chinese inflation report that's also coming through, of course, this week. And top of trade numbers, which Yvonne pointing out is also on deck for today. Also on deck today is what's happening in Japan. You have the outgoing Prime Minister Shigeru Ishiba's resignation. They're setting in motion a leadership race that will be closely watched by global investors.
This agreement was achieved based on the government and President Trump's administration. It is with regret that our administration could not fulfill our responsibility.
Yeah, and Ishiba then went on and said he will stay on as Prime Minister until his successor takes over. Let's bring in Sherry On, our co-anchor, of course, joining us out of Tokyo this morning. It's quite a weekend for you, Sherry, quite a morning so far. What happens next here?
Yeah, the leadership election is what happens next, and we are going to get potentially a date for that on Tuesday, according to the election panel head Ichiro Aizawa. Now, local media are reporting that his successor could come in as early as October. We could see the leadership election then, but you said it was a very eventful weekend, and the Prime Minister resigning on Sunday. This came not necessarily as a surprise, given that we had seen some top LDP party executives announcing the resignation, including the Secretary General, and we had heard from other top LDP leadership visiting the Prime Minister, urging him to actually resign, given, of course, the need for party unity at this time. The public not happy with what's happening with the state of the economy, especially when it comes to rising consumer prices, the difficulty when it comes to the weakness of the Japanese yen. But in question right now is how the LDP will move forward with the rules and the schedule of the next leadership election, and of course, who will become Prime Minister next.
Yeah, can you walk us through? I mean, we just showed a kind of a baseball card sort of image of the contenders, right? Who is likely going to be the next to replace Ishiba?
That sort of baseball card panel, very similar to what we saw back in September when Prime Minister Ishiba became Prime Minister in October. Sanae Takaichi, for example, there on the left, the hardline conservative, tops the list in many recent opinion polls. She would become the first female Prime Minister if elected president of the ruling party. She narrowly lost to Ishiba back in September, but she's also seen as reversing back perhaps towards the policies of former Prime Minister Shinzo Abe, who she was close with. We also have the likes of Shinjiro Koizumi, for example, the agriculture minister, only 44 years old, could represent a new generation. Others on that lineup, including the chief cabinet secretary, not to mention the finance minister and also the former foreign and defense minister Kono Taro. But we'll be watching for what the leadership election brings, as whoever gets elected has a really tough path ahead. We're talking about, of course, the monetary policy path, the economic package, which will need to be arranged by the end of the year. A key issue that the ruling LDP that does not have a majority in both chambers will need to contend with opposition parties.
Sherry, thank you. Sherry on there stepping in to tell us what's going on and what's next in this whole kind of political uncertainty in Japan as well. Let's bring in Michael Cucek, is assistant professor of Asian studies at Temple University's Japan campus and joins us now live from Tokyo. Professor, it's great to have you on. Sherry kind of laid out what the challenge is going to be, whoever's going to be the next prime minister. Do you think the LDP could actually rise to the challenge?
I don't think the LDP has a chance to do much because basically the electoral system has set what the conditions are for the next prime minister, whoever that prime minister is, male or female. They don't have a majority in the House of Representatives. They have to work with other parties, and frankly, that's really difficult. Now, Ishiba did a fantastic job at that. Everybody's talking about how weak he was or how incapable he was to get things done. He got things done very well. His replacement may be far worse. So the actual conditions, rather than the personalities or identities or knowledge of the candidates, are the basic conditions that set the course of Japan.
Michael, David here, and just to ask, in terms of global consequence, is there anything I should be paying attention to as far as, I guess, potential changes to either foreign or economic policy here?
With a new prime minister, there will have to be continued adjustments to the very volatile and very unpredictable world of Donald Trump. There has been a deal signed, but the deal is really unacceptable on the Japanese side, even though the government, this Ishiba government, has agreed to the conditions set by the United States. It's very unclear that any of these conditions can be met, that any of the investments that are required can be organized in the fashion that's described in White House documents. There is really no way that it's going to, that a new prime minister is going to be able to take the reins and change Japan or move Japan in a new direction. It's just holding things steady, and even that will be very difficult. In terms of economic policy, you
mentioned the challenges ahead. Yeah. Sorry, go ahead.
In terms of economic policy, the issue is basically Japanese debt and what it limits governments in terms of their ability to change fiscal policy or monetary policy. Definitely a weak yen does put pressure on a continued rise in interest rates in order to, in some way, push the yen upward. But that, of course, will lead to knockoff effects here in the economy of Japan.
You mentioned all these challenges, and it seems like there is this, need for a strong leader figure. Obviously we think about Shinzo Abe as that man, during this period of a revolving door of prime ministers before. He was the one that actually united this party. Are you looking, is there anyone who's being talked about as replacements right now, as someone that can actually be that visionary?
Shinzo Abe was practically born to be leader. He was certainly, as the grandson and grandnephew of prime ministers, as the son of a foreign minister, he was built to be PM one day, and he had all of the psychological building blocks. He could get along with people. He could also frighten them. None of the persons who are running for the PM's position, well, first the presidency of the LDP, and then that person will presumably become the next prime minister, though that's not determined by this election. There's no one with those same qualities. And if you don't have the whole package, you can't expect the same level of leadership. So I'm looking at a bunch of weak prime ministerships continuing on into the future.
What would change that cycle?
What would change that cycle is a complete realignment of the political parties into some kind of rational political system, with a large party having a broad left to right spectrum. Now, there's been talk about realignment in Japanese politics for over 30 years. It's never happened, basically because egos got in the way, and basically because the right wing of the LDP stayed loyal to the LDP. Now right-wingers have a new party, the Sanseito, which they can vote for. And they proved to be devastatingly effective in the House of Councillors election. They actually are agents of greater chaos than what we've had before, because then you have to bring the right wing and the left wing in some way together, and this is just not even conceivable at this point. So what will make things better? Your guess is as good as mine.
Professor, thank you so much for the time. Michael Cucek, there, Assistant Professor of Asian Studies at Temple University, Japan campus, live for us there. Out of Japan, really going into this big story today. Coming up here in shows, Lotus Asset Management CIO joins us, Hao Hong, to talk us through where we go next with these Chinese markets amid signs that they want to cool the bubble, question mark. We'll talk to him in a moment here. Also counting down to the open of trade, and this liquidity-driven rally might get an aid from the weather out there, because there's no shortage of liquidity out there. The T8 here in Hong Kong still up until at least 11 a.m. And just by virtue of how things look and feel and sound from outside the studios here in central Hong Kong, that doesn't seem to be a signal that perhaps could be going away in time. Anyway, keep your eye on the weather. The opening bell 14 minutes away. This is the China Show. Welcome back. You're watching the China Show. Futures are weaker going into the open today. The fix of the day is coming up, bottom of your screens. There we go, 7.1029 against the U.S. dollar. We have some trade numbers set to come out at some point this morning. Let's talk about this market and where we go from here amidst, of course, some doubts over the short-term path of the market. Our next guest actually doesn't believe a speculative frenzy exists in the Chinese stock market, even as the rally there resumed on Friday. Let's bring in Hao Hong, managing partner and CIO at Lotus Asset Management. Yeah, so it's lay the case out for us.
Yeah, well, I think it's way too early to be worrying about speculative frenzy. But if you look at many of the trading statistics, for example, turnover ratio, right? So it's about 2 to 3 trillion yuan per day. It is at the similar, on the absolute terms, it's at the similar level as 2015. But then if you compare to the free flow market cap, right, so it's like less than half of what it was in 2015, right? So that is showing you that actually trading volume can surge substantially higher from here. So it can actually double if we are entering into a bubbly phase. I think that would be one of the measures that I'll be looking at. And I think secondly, people start to worry about the margin trading activities. So margin trading total volume is about 2 to 3 trillion as well. But then once again, you're in a substantially larger market. Right? So I don't think there's much to be worried about. And also in 2015, by the way, there was a lot of OTC leveraging. Right? So remember, there was umbrella trusts. Right? So people can use an app on their mobile phone to get a margin loan. And also, there are other activities, people actually borrowing from non-broking companies. So those companies' margin trading activities is actually not in the CSRC database, and therefore it's not showing 2-3 trillion yuan number here. But since then, all of this has been outlawed, and therefore, I would say that we're now still in a relatively early stage of a bull market.
Okay, so in terms of this rally, how much more do you think we can go, and for how long?
Yeah, well, I think, if we do it properly, right, so if we don't hastily trying to kill the bull in its infancy, we can go substantially higher from here.
It doesn't mean because we're not seeing signs of frenzy, it doesn't mean valuations haven't moved up slightly. Are you concerned over valuations at this point? And if so, where?
Yeah, well, I think overall we're actually seeing valuation at the long-term average for the overall market. So that's not a cause of concern. But then at the same time, in some pockets of the market, there are some sort of a very speculative activities going on. For example, some of the semiconductors company is trading at 6,000 times PE. But then, if you look closely to the financial statements, many of these companies, they are trading at a very high multiple is because they turned profitable this year.
They just turned profitable.
Yeah, so from a loss-making company into a profitable company. So I would say that, at this very early stage, the earnings per share for these companies are very small, and therefore they're showing up at a very expensive earnings multiple. But then if you look at many of the U.S. tech companies are the same, right? So, back in 2000, Amazon has no earnings. And many of the big tech companies right now, who is, over $1 trillion market cap, back then there's no earnings, right? So if you try to calculate earnings at this very early stage of the growth phase for these companies, it would inevitably showing up very, very expensive.
You've been also talking about what's been going on, these small caps, as you say, right? There's
right.
quite a bit of rally going on here.
Yes.
What do you think is driving that?
I think small cap in general is doing very well this year. It's substantially outperforming, especially if you're looking at the CXO, the drug companies, the semiconductor companies, and also some of the tech companies, the robotic companies, for example. They're doing exceedingly well this year. And I think, there's one of the very popular alpha strategy that the hedge fund industry is engaged in, which is basically long a portfolio of good quality, high growth companies, and then they short the small cap index futures. And so, in so doing, they were able to capture the alpha of a portfolio of small cap companies. Now, such a strategy, inevitably, the result is that you're seeing price momentum in many of the small names just continue to go up, because everybody crowds in, everybody's sort of engaged in a similar strategy. It could create fragility in the system, but I would say that, since early 2024, there was an episode where you have a Quanquick, right? So many of the small cap companies just collapsed, and that washed out a lot of hedge funds back then. I think since then, after more than a year, we should have learned some lessons from that episode, and regulators could be substantially more clever this time.
Okay, Hal, hold that thought. We'll have more from Hal Hong there, managing partner and CIO of Lotus Asset Management. Your pre-market is looking like this. We're seeing slight gains here in Hong Kong, despite this kind of T8 as well. So certainly we'll watch how this liquidity-driven rally goes here. Futures are unchanged here this morning. This is Bloomberg.
Welcome back. Hang Seng Tech, Hang Seng China on your screens. A little bit of green on your screens here. Dollar China 712.63, 710 and change was the fix of the day. We're looking at some of the big tech plays going into the session today. You had a rally into the close of Hong Kong on Friday, a rally overnight. When I say overnight, Friday session in the U.S. Baidu and Alibaba, and you're probably going to see that as well coming through this Monday.
Yeah, Baidu is the leader in the bar so far. We're up close to 3% for that stock in particular. In terms of stocks to watch, we're watching, of course, big tech as well. There you go. There you go. Alibaba's also up some 1%. So certainly continue to see a lot of momentum around the growth story and the growth stocks today. Property stocks, so Shenzhen joining the list of tier 1 cities here on easing some of these home price and buying curbs as well. You are seeing mostly higher for some of these Shenzhen listed or at least Shenzhen related sort of property stocks, as like Shenzhen Investments up 4.5% as well. We're also watching Zijin Gold, right? Zijin Gold announcing that IPO, said to be the world's second largest this year after CATL. We'll watch Zijin Mining shares coming up. Open is next. This is Bloomberg.
Welcome back. You're watching the China Show, counting down to the open of trade. There's a bit of weather out there. I feel like I'm coming down with something, Yvonne.
Oh, no.
In fact,
is it man flu?
No, here's the thing. Well, I'm picking it up from you.
You just came back from a holiday, man.
Here's the thing. I was at the airport, and I literally walked into a sneeze. So there's no better feeling than walking and coming out of a sneeze. You know when you walk through the air of a sneeze, And it's too late, obviously, to hold your breath. But I'm just giving you a bit of a heads up.
Yeah, okay. Yeah. We'll see what happens tomorrow. But yes, certainly there's a lot to talk about here today. Obviously, there's a lot of talk about the Fed and whether, 25 or 50 basis points is going to be happening next week as well in that Fed meeting. You have Japan, of course, the political uncertainty on that front there. And whether in China we can see another resumption of this rally. Looks like it could be the case here today onshore if you see the CSI 300. We're seeing slight gains to the upside here. Shanghai is slightly flat, but obviously we're watching the small caps as well, like the Chinex, like the Star 50, which have been on a tear, and slight downside for Shenzhen here this morning. And we're watching very closely. Look, Capricorn Technologies, there you go. We're seeing another down day for the AI player there. We're down about 3% for that chip stock. So certainly that's one thing to watch as well. Maybe it could be an indicator of what's to come. But yes, we're also watching Shanghai crude, just given the surprise, that you could say, up another sort of output boost from OPEC Plus over the weekend. And so that's why we are seeing oil prices are to the downside here today. You flip the boards and watch what's going on in Hong Kong. So, of course, it's a T8, so we'll see what happens to volumes and the like here as well. But we are flat right now on the Hang Seng. HS Tech is also not doing too much. But certainly there's a lot of questions about where we are in this sort of China tech rally as well. You take a look at Baidu, that's still doing remarkably well. We're up some 4%. Baba's up 1.5% as well. And there, we're also watching very closely the property side of things, right? So Hang Seng property is doing okay, maybe because HIBOR is coming back, but really also because of the China property names. That is one to watch, with Shenzhen now joining the likes of Shanghai and Beijing in easing these home buying rules, right? So far the commentary, I think JP Morgan said it's not very exciting, not unlikely a surprise, just given what we've been seeing from Beijing and the like already. But the oil names, that certainly is in focus here today. Mixed picture across PetroChina, against some of the likes of China Oilfield Services, for example. Costco Shipping Energy, though, that's up some 6% right now. And we're watching the property stocks, right? So they're removing home purchase restrictions for local families and those with even without local household registration as well. There you go. Country Garden is up double digits, 10%. Dave.
There we go, off the ground. So the other big story in China today is China's investigating its securities regulator for alleged violations. That's the headline of the Bloomberg story. The chart shows you how the main benchmark performed under Yi Huiman on your screens, currently under investigation for, as we were pointing out, suspected violation of discipline and law. Stephen Engel, our Chief North Asia correspondent, is here with us to talk us through what we know so far about this current probe, Steve.
Well, bring up that chart again because you can see it. If you want man flu, you're going to get it from me.
Oh, no.
That sounds like real flu, really.
That's real. That's Beijing flu, yes. Okay. Bring up that chart because you can see that the market lost about $5 trillion at the time of Yi's removal. And there was lots of speculation and lots of emphasis on party discipline in the stock market and possible violations of law as that market really sold off. And, Yi Huiman was the second CSRC chairman in a row to be removed because, again, Xi Jinping has emphasized discipline, and he has talked about no mercy as far as stock market manipulation or any of these other lax discipline practices. And he's also vowed to go after tigers and flies, not only in the PLA, but all across the ranks of the party. So when he disappeared, or when he was removed, essentially, more than a year and a half ago, February of 2024, they brought in Wu Qing, known as the broker butcher, right? He is the man in charge of discipline. And that really sent a big message. So now that we're getting news that, in fact, Yi is being investigated, shouldn't come as much of a surprise, really. Now, what is he allegedly guilty of? That's what's going to have to transpire over the coming months, if not years, because it's already been a year and a half that he's been out of the picture.
What do you think this investigation tells you about how central government is looking at the regulations, and at a time when we are seeing markets are quite robust?
I think they're lifting up every rock and looking at every possible malfeasance. And if you kind of connect the dots to some of the other investigations as well, keep in mind Yi was ICBC chairman from 2016, I believe, to 2019. Now there was other investigations into ICBC. They were in the spotlight in February of this year when a death sentence with a reprieve was handed to ICBC's ex-Vice President Jong Hong Lee for bribery. Now, again, there was connecting the dots as well. His term happened and was coincided as well with Li Xiaopeng, the former chairman and party secretary of China Everbright, who was sentenced to 15 years in prison in March. And then a former executive at China Renaissance, Tong Li, who was also detained. So I think the regulators, not the regulators, the discipline administration is looking and uncovering different possible connections to the banking sector and the regulator, and whether there was some, dare I say, cahoots going on.
Okay, Steve, thank you. Stephen Ingle there, our North Asia correspondent, trying to kind of align everything for us a little bit here as well. It's interesting, too, because everyone's talking about, you know, if we do see this stock rally continue, which Hao Hong says we can for some time, I think he said 3 to 6 months is easily attainable here right now. What does this mean when it comes to how policymakers are going to react to monetary policy, for example? Does it in some ways delay the impact of cuts or triple R cuts and the like here because of the narrative here that possibly this rally is liquidity driven?
Yeah, a further rate cut might even engender further speculative spirits in the markets. And, you know, some of the economists have in fact weighed in specifically on this very issue and whether or not we should actually connect the two stories together, and whether or not economic policy then goes then to affect market policy, with a, of course, connecting strand there would be low interest rates. But yeah, let's get a sense from Hao Hong.
Yeah, Hao Hong, managing partner and CIO at Lotus Asset Management. Yeah, do you think those two things are related? What this equity market does, and whether PBOC is going to be doing anything later on this year?
No, I think more likely than not they're going to continue to cut interest rate, you know, because there's no inflationary pressure in China, right? So indeed, you know, we're still fighting with deflation. So I wouldn't be surprised to see interest rate cut and also triple R cut towards the end of the year.
I mean, I'm glad you brought up the lack of inflation. So I'm just going to mention stock names, and you can chime in on the stock names itself, right? So what's happened recently is market leaders have started to underperform. So BYD in EVs, Meituan in food delivery.
Yeah.
And the market strategy of buying the leader doesn't seem to be working out, because they think that perhaps they won't fare as well during this fierce competition. Well, do you think the market is getting this one right? Or is it time to then get back into these market leaders? I think Meituan's almost about to take out 100. BYD's almost about to take out 100. Just your thoughts on that strategy.
Yeah, no, well, I think, you know, right now people are really looking in the new growth sectors in the economy, right? So if you look at, if you're focusing your portfolio on the old parts of the economy, which is, you know, property, baiju, that kind of stuff, right? So it's not going to give you good return in this market. And also, you know, before this rally, people were buying bonds, for example, you know, because bond use has been declining for 4 years in a row. It's been a huge bull market for the bond managers. And now, you know, people start to realize that because of the government's policy pivot, that, you know, we're going to fight deflation rather than tolerate deflation, right? So there's a mindset change, and therefore, you know, people should tilt their portfolio towards reflationary assets rather than the old guys.
Is the jury still out, though, on whether this is, you know, this anti-involution sort of campaign is going to be reflationary?
The intention is to reflate the economy, but then whether you can be successful or not depends on how you can sort of rescue the property price from continue to fall. And I think in July we're still seeing a falling property price across the board, but I think the momentum, the speed is actually slowing down. So we're seeing some initial results of that.
Okay.
Yeah, I think we've been talking about this for some time, you know, whether the equity market, and I think we partially answered the question, can sustain its rally amidst low inflation and property prices remaining subdued. And where do you think the earnings story is going to come from eventually here?
Yeah, if you look at the overall market earnings, right, so it's growing at like 2%. It's anemic, and, you know, mostly because the big banks are still generating very low single-digit earnings growth, and also, you know, many of the traditional names, they are very low single-digit growth names as well. But then if you look beyond, this old part of the economy, right? So if you look at semis, drugs companies, we discussed just now, they're having like 200% earnings growth, right? So Capricorn is turning from profitless to a profitable company, and many of the drug companies, Labubu is seeing 300 times EPS growth as well. So I think these are the sectors we didn't have before, right? These are the sectors that we didn't believe. Now that for some reason this cycle, these sectors are turning around. There's a paradigm shift from a profitless company becoming a profitable company, and therefore people are willing to pay up for these companies, and I think they should continue to perform.
Yeah, I'm glad you mentioned Capricorn. This is a name that not a lot of people, in fact, had heard of and knew how to spell going into 3 weeks ago. Now it's on everyone's
That's right.
mind. And so the reason I ask you that is NVIDIA in China, that theme. What do you think is the closest thing to NVIDIA in China?
Yeah, I think people think that Capricorn is the Chinese NVIDIA for now, because now Capricorn is only having less than 5%, I think like 3% market share in the chip industry in China. Right? So people think that, wow, because the U.S. is forbidding China buying U.S. chips, and therefore you have to buy Capricorn. And therefore, it's going to take 100% of the market share. And therefore, the earnings are going to explode, et cetera, et cetera. Now, if you look at these companies, it's investing like less than 1 billion yuan in R&D, right? So it's like substantially less than whatever company you can come up with, right? Even the Baidu company put in more
R&D
than that. Yeah, more than that. So I would say that, it's a very odd company, right? So, but the story is just very good, right? It's been around for 10 years, and for the longest time it has been, when the market goes up, it tends to be the darling of the traders for some reason. Right? People love trading these stocks, but of course we haven't seen this kind of surge for a long time now. Right. So I think some of the brokers, I think Goldman was putting at like 2,000 yuan price target.
Upside.
And there could be a chance, because, as the market goes up, people will come back to this name.
In terms of potential catalysts, what are you looking at for the next few months?
I would say that people are starting to come around to this reflation idea.
Okay.
Property price stop falling so fast, right? So sort of stabilize a little bit, and then once the Fed start cutting, then we start cutting interest rate and also triple R, and then people start to believe the bull market story, because this is a bull market that we've been waiting for 10 years, right? So the last bull market we had was in 2015, right? So back then it was at 5,000 points, and I think in the previous bull market before 2015 was in 2005. So each of the 10 years you have a bull market. It's quite interesting. So it's 10 years in the making, and let's hope that this time we get a truly bull market rather than a technical rebound.
Okay, yeah, we'll revisit the story in 2035. Then. We'll see. Hao Hong, thank you so much. Managing Partner, CIO, Lotus Asset Management. Hopefully, of course, there's something in between those two things.
And we'll still be here. We'll see.
Oh, yeah. If not,
all going to be here.
The robots are going to be replacing us. I'll borrow what Hao Hong said. Reflation in Goldman Sachs, and I'll get to Japan in a moment. So this week, inflation's coming out, right?
Yes.
And I think Goldman put a note out on the weekend that month-on-month PPI might actually see the first positive increase.
Ooh.
This month-on-month this week when it comes out. I think it's the last time we saw it was back in, I think, November of 24. But anyway, Japan.
Japan, we got some news from local media here. So, who are the kind of serious contenders to replace Ishiba, right? So, we have just learning here from Kyodo News that Yoshimasa Hayashi intends to run for the LDP head. He is, of course, the chief cabinet secretary currently already. So, his intention to run, according to local media. So, another one to add to the list as well. Coming up, we're going to talk chips and AI with U.S.-listed Taiwanese firm Silicon Motion from the BofA Securities Asia Pacific Conference. That is next. This is Bloomberg.
All right, so we're about 15 minutes into the cash market session. We had a decent close on Friday as the rally resumed, past tense, and it's extending those gains as we see on your screens right now.
Yeah, as Hao Hong mentioned, right? We've been waiting for this rally for 10 years. this slow bull run that continues, right? We had one day of correction on Thursday, and then Friday things kind of fired up once again here. And it looks like today we're still seeing that and punching some decent gains here onshore and offshore here, in particular HS Tech. We're watching very closely as well. In terms of what the week ahead, of course, there's a lot ahead, right? We talk about, we have trade numbers coming through from China. You have inflation numbers as well. Certainly one to watch as we count down to, of course, inflation prints in the U.S. That is the next sort of event post to watch here, post-U.S. jobs report, where we talked about what, a 20,000 plus sort of job gains here. That certainly sends some worries in this market of really, is the labor market really weakening substantially in the U.S. now to warrant this talk now of 50 basis points as an insurance cut possibly from the Fed next week. So certainly that is the one thing to watch. We talk about some political news in Thailand as well. There's a bond auction in Japan, which we continue to watch given the political uncertainty there as well. And of course, the ECB rate decision, a lot of political uncertainty in France. We talk about the UK as well these days. Yeah, certainly the UK is also part of the France story as well, obviously for different reasons. But yeah, the melt up in yields and certainly the spreads that we're seeing, particularly in France, given the uncertainty out there. And, it's a big next 48-hour window as it pertains to politics in France. And the interesting bit is unanimously almost economists don't think the ECB is going to act on this from a rates perspective, and why would they? But will Madame Lagarde, of course, comment on the economy that she previously oversaw as finance minister? That all comes through, of course, on Thursday. Okay, we'll take a very short break, and on the back of this, we'll tell you about these market moves that we're seeing across, particularly when you look at the chip space here in the Asia Pacific. Happy Monday. Right, welcome back. You are watching the China Show. Let's talk about chips, shall we? Graphics coming up on your screens, and the company stock, one company stock, the CFO joins us in a couple of seconds here, shows you that really this outperformance of Silicon Motion, you compare that to, I think you've heard about NVIDIA. You probably heard about a NASDAQ. The SOX index as well. There you go. The stock is up, well, let's call it 50%, right? Year to date. So let's get a sense really of what the company's up to, what the business outlook is, what the underlying economics of the sector are looking like. And we're joined, in fact, by the CFO, Jason Tsai. My apologies, exclusively from the BofA Securities 2025 Asia Pacific Conference. Jason, good morning. And I think we've worked out the technical bugs, so thank you for sticking around and being patient. Jason, just help us understand what's going on in your sector and what the outlook is the remaining, let's call it 4 months of the year.
Yeah, so we're really excited by our outlook for the rest of this year. We've been growing pretty significantly throughout this year, from what we talked about, what we did in Q1 to what we expect to exit the year at. We expect to exit the year at $1 billion run rate, which is about a 50% revenue growth from Q1 to Q4 this year. So we're really excited about the opportunities ahead. We've been laser focused on a number of opportunities centered around AI, from AI at the edge, also now going into enterprise and data centers as well. So there's been a number of significant developments for us throughout this year and that we've been working on for the last many years that we believe will drive significant long-term growth and share gain for us over the next many years to come.
Yeah, the sell-side analysts are talking a lot about this new product cycle that is underway for Silicon Motion. Jason, I get your take on when do you see kind of the revenue contribution from some of these new products to really meaningfully show up in your financials?
Yeah, so if you take a look at our business today, the majority of our business, 95% of it, is coming from more PC and smartphone centric. Over the next 2 years or so, we expect to be more than 20% of our business coming from enterprise SSDs, coming from automotive. So significant growth in additional markets that we see as meaningful tailwinds to our business as we continue to scale into these new opportunities. We're seeing new products in IoT, in AR, VR, in a number of different avenues where AI is now becoming front and center with a lot of these end markets. We're seeing certainly more demand for high performance storage, power-efficient solutions. And all of these things help enable, whether you're at the data center or whether you're at the AI at the edge on the PC or smartphone, enable faster AI responses, faster inference, faster training, faster results, and more efficient processing. And that's what's key for a lot of these AI applications to really drive growth long term.
Jason, I caught what you mentioned a few seconds back. You talked about potential growth or current growth from data centers. If you could elaborate more on that, please.
Yeah. So, data centers historically, you've had high-end SSDs that are really high performance, but they're really expensive, right? And that's been a great storage platform for the high performance requirements of a lot of the data center. You've had hard disk drives where historically they have been able to deliver very high density, cheap storage that stores a lot of the data that, the world creates day after day. Now, as AI becomes more and more prominent, as you're trying to get more training and inference and getting that to happen faster, a new category of storage is emerging, relying on the next generation of 3D NAND that's cheaper, that's better performing, and that can deliver kind of the best of both worlds. High performance SSD performance that can deliver faster inference, faster training, all the while with lower dollar cost per bit, lower total cost of ownership, lower operating costs. That's become very similar to hard disk drives, and we're at the forefront of that. We've been developing these controllers, these solutions for enterprise and data centers for the last couple of years. We've won 2 tier 1 customers and 4 additional customers last year. We expect to start seeing revenue come online here late this year, going into 26, and then as well as scaling that more meaningfully into 26 and 27 to be 5 to 10% of our revenue. So we're very excited about this opportunity. We see a significant amount of inbound interest, and honestly, it's a lot more inbound interest than we've got the capability for at this point. So we're scaling up our resources.
Jason, we probably have about 30 seconds left. I was going to get your take. Most of your products are made in Taiwan and some by SMIC, I believe, in mainland China. Can you tell us a bit more about what the plans are going to be manufacturing-wise? Are you looking to diversify your supply chain, for example?
Yeah, we are. And we are working on diversifying our supply chain. But TSMC has been, our primary foundry partner for a very long time, and they continue to do a great job for us. Most of our products, while in consumer electronics, our customers have developed very sophisticated supply chains that have manufacturing throughout the world. We are working with other foundry partners that potentially open up opportunities for us longer term. But we are very happy with the way TSMC has been able to support us, and certainly for a lot of the advanced geometry products that we are working on, TSMC continues to be our primary partner for these products.
Jason, we got to leave it there. Jason Tsai, our CFO of Silicon Motion, joining us there from the B of A conference. Much more coming up the next hour. You're watching The China Show.
Tariffs push up inflation. We're seeing all of this take a toll on job growth. This is an economy that's being pushed to the edge.
What it really puts on the table is a Fed that gets back in motion for cutting rates. And if the economy's not falling off a cliff, that's a pretty good combination for risk assets.
The markets are quickly moving from pricing in 2 cuts for the rest of this year, meaning 1 in 12 days and 1 in December, to possibly a cut at all 3 meetings.
Some of our guests from Bloomberg TV reacting, of course, to the U.S. jobs report on Friday, which did show, of course, that headline number was weaker than expected here. That's why you're starting to see that probability of a cut next week as almost near certainty here right now after that jobs report. Just to give you an update on the weather as well, that Typhoon 8 signal looks to be extended, right? So to remain in force at least until 1 p.m. this afternoon. If you have the PM session for class, don't even think about it here today.
Yeah, that's done. Markets, though, are brushing starting off, as far as the market being able to trade, right? So it's certainly a story of yesteryear that the market doesn't trade when you have a T8. So it's 0.4% to the upside right now. About 30 minutes into a T8 session, which is something we haven't really said a lot here on shows. Right, going into the rest of the region, so equities are actually doing well. A lot of this is really down to what's happening in Japan, where you have a 2% lift coming through out of the Nikkei 225. You're also getting some of the big chips and heavyweights there, the Kospi, SK Hynix, and TAIEX index is also doing quite well. S&P futures are also up, and I think the other big story is, does the jobs data that now has largely, and we'll see, has cemented the Fed cut, might that provide the additional tailwind equity markets need to carry us through to the end of this year?
Yeah, certainly that's going to be the one thing to watch, right? Is it going to be 25 or 50? I think you have some market participants that are sticking their neck out and saying, look, maybe 50 basis point cut is now also solidifying this sort of narrative here because of just how weak that jobs number was. I think, Stephen Englander, who's going to be joining us in a few minutes from StanChart, saying if we get something that's sub 40, he mentioned this before, that jobs report, that does build the case for 50 basis points. BE's Anna Wong, though, saying, I don't think so, they said right now. It's still kind of the verdict is out there because it depends really on the revisions that we're going to see. And August, she mentioned there is a bit of an anomaly in the data, that sometimes the data does undershoot consensus here. So we really have to see how things play out. Yeah, and do we get to the 4%, Hannah, do we get a 4% on the 10-year yield, which is the level that we're tracking as well very closely? I think we're up 2 basis points right now, so we're about 9 basis points away from the threshold, that very nice round number as far as that's concerned. Okay, the other big story we're tracking here is on the leadership change in Japan. So we know that Prime Minister Ishiba is stepping down. He will be staying in place, of course, until they figure out the new person. We understand from Kyodo News about 30 minutes back that the chief cabinet secretary is intending to run for the LDP head among the many names that have been floated yet again of a possible replacement or successor to Mr. Ishiba. I mean, you've been talking about the equity rally that's happening in Tokyo here. Amidst this political uncertainty, it seems like there's quite a lot of conviction in this market, and perhaps what people are pricing in is that whoever is going to start leading this LDP-led coalition is going to be still at a pretty weakened position, right, given the fact that in the lower house parliament they don't have a majority. So what does that mean in terms of a policy's perspective? Is it might be a bit of a stalemate, right? We take a look at, and whether the BOJ can still hike is still a kind of a question mark as well. Maybe that's why there's some tailwinds heading into this equity market. Yeah, well, let's put that question right now to one of our guests this hour, Rachana Mehta, on the bond markets, co-head of regional fixed income at Maybank Asset Management, joins us right now. Good morning, ma'am. Thank you for joining us. So, good morning. Let's say I'm sitting on a portfolio of JGBs. Does this concern me at all, what's taking place politically in Japan?
Yeah, I think I do expect a lot of volatility, but we've already seen sell-off before this news, correct? Because a lot of people are expecting him to step down. There was so I'm not that worried in terms of the deficit for Japan over the long term. I think that JGBs have already sold off. The curve has steepened, and recently you've seen some insurance company also buying the long end of JGBs. So yes, maybe you expect a 5 to 10 basis point sell-off, and we have seen a massive curve steepening across the globe. So to me, I think you may see a short-term flattening in the trend, but generally I am not that worried. Yes, the yen may weaken short-term given the opposition actually really wants a higher consumption tax cut. So we will have to see, but I feel that market is already priced in some degree of risk.
Can the BOJ still hike this year, Rachana?
I think definitely if you look at today's GDP growth has been very, very strong. Inflation is still above their expectations. So I do expect at least a 25 basis point hike in Japan. It's just that maybe it's delayed because of political uncertainty.
Okay, well, I'll take your 25, but I'll do the opposite way and put a negative sign to that, and then we'll talk about the Fed now. Do we get a 25, you think, or a 50? What are you positioned for? And do we get even more than a 25 for this cycle, or this part of the cycle?
Okay. I think that beginning of the year we were expecting 75 basis point rate cuts. So I think we stick to our view that there'll be 75 basis point, consecutive 25, 25, 25. For us personally, it's very, very difficult for them to cut 50. Yes, the labor market is slowing, but inflation is still a little higher than Fed expectations. So we definitely expect 25, but I know market is thinking that there's a chance they may cut 50. But 25, 25, 25, so 3 rate cuts this year we are expecting. In terms of portfolio positioning, we prefer the 10-year part of the curve. And actually, slowly, I think that even the 30-year part of the curve looks interesting. I know the whole world has got a steepener trade, like 230s or 530s. But there's a chance, to me, I think that 30-year may outperform, like a bull steepening, which we talked about. And since everybody is short 30 years, I think there's a chance that 30-year may rally, actually more, which we saw on Friday. So actually, I continue to even like some 30 years in U.S. Treasuries.
I have to get your take on how the narrative has certainly changed, right? I mean, if I see political uncertainty in Japan, in France, for example, we've seen basically how spreads have taken off there. What does this tell me about how I should be looking at U.S. Treasuries now? In some way, I mean, now that the fiscal concerns, do we push that to the wayside now? Is it more about the cyclical downturn that people are pricing in? Does the narrative really change around U.S. Treasuries now?
Absolutely. Actually, if you look at the fiscal deficit, I think market is not worried for this year and maybe middle of next year. And the tariff revenues are coming back in the U.S. So for me personally, I'm not that worried about deficit for the next 1 to 2 years. Yes, from a longer term perspective, we'll have to see how it pans out. So I think the slower growth is more a concern now in terms of job markets. Yes, the tariff inflationary impact may be short-lived. I do believe that it will not be a long-term impact, because if you look at rest of Asia is facing deflation, we are cutting rates aggressively. So from that perspective, my view is we need to focus on the economy, especially over the next 6 months to 1 year, and maybe longer term. Yes, the deficit concerns will pop back in.
Okay. Rachana, thank you so much for the time. Rachana Mehta there of Maybank Asset Management on her calls really on this Fed story, 25, 25, and 25. Hard to make the case for a 50, but our next guest, Stephen Englander, has and will make that case for a 50 in a couple of seconds here. Global head of G10 FX research at StanChart joins us from New York right now. Stephen, good morning from the Asia Pacific. Thank you for joining us on your Sunday. Lay out the case for a 50. How clear is that to you at this point in time?
Well, to me, it's pretty clear. I think the easiest way of addressing it is to ask the question, say the Fed had been sitting in June, like, say, 2 weeks before or the June meeting, and they knew exactly the way the numbers would play out, both the unemployment rate, the employment to population, and non-farm payrolls. Would they have been so hawkish? Would they have been so adamant about saying that they didn't have to hike? I think they would have, that they didn't have to cut. I think they would have cut at least once between June and July. So I think the 15th September, I don't think they're going to, I don't think it's going to be a panic cut, but I think they're going to argue that it, either they missed it or the data missed it. They're looking at what they're seeing and they're saying, yeah, the 50 basis point adjustment is appropriate.
Is it more going to be like an insurance cut, Stephen? I just wonder, just how weak is the labor market right now?
I think the labor market is pretty weak, but I think the economy isn't that weak. I mean, when you see the GDP numbers, and most of the demand indicators, they seem to be, they're not great, but they're fine. They're not as weak as the labor market indicators. So I think it's possible that the weakness is concentrated in labor markets. I think that they would do 50, and we actually don't think they're going to do much after that, because we think that they'll say, look, we did a chunk, we've gotten probably halfway to neutral. Let's see how this plays out. And I think that we'll probably see enough strength that they, as time goes on, they don't feel the need to ease much more.
Okay, that's an interesting observation, because it seems like, to your point, the case isn't clear beyond the September meeting. Is this a month-to-month, almost a meeting-to-meeting conversation we'll need to have now, Stephen?
I think so, but I think it also depends on the tone of things. The fiscal package has some fiscal stimulus to it. It's not, it wasn't fiscally neutral, so there's a bit of stimulus there. There's a bit of inflation that we know is coming. It looks, as if something's happening on the productivity side. We're not exactly sure, but it may be stronger than we thought. The Fed they will be open to cuts, but I think they may end up deciding that they don't have to.
Where's the direction now for the dollar then?
In the short term, we think we could see more dollar weakness, right? Because the market is pricing in 25, and realistically, the Fed's not going to get up there and say 50 and done. They're going to say 50 and we'll wait and see. And as data, if we're right, as data come in, the market will say, yeah, they probably don't have to do much more. So I'd say over the next month or 6 weeks, we're kind of thinking that there's some moderate weakness in the dollar, but we think that weakness would be the dollar's last decline. And as we get towards the end of the year and into 2026, we'll actually see a bit of a dollar rebound. It's not going to be enormous, but market positioning is a bit short dollars. We think there will be some upward pressure on U.S. yields, and the economy probably isn't going to collapse. So a bit of we'll go through an episode of dollar strength here, but not immediately.
Yeah, well, I was about to say, Stephen, just looking at how Europe and the political story there is evolving. Look at France, not Europe, but the UK. You look at how Japan is playing out today with the yen weaker against almost everything today. Do you think that what this week looks like is a case of dollar strength? Very short-term view, Stephen.
It's possible, but we're getting shocks from everywhere. The question is, which is the biggest shock? Is it the politics in Europe and and in Japan and the lack of growth prospects, or is it the market coming around to thinking, well, maybe the Fed isn't going to be as hawkish as we thought we were, and they're going to back away. In this immediate month or 6 weeks, we think the Fed shock will be the biggest one. But you have to, if there's a political crisis in Europe, that's going to really weigh on the euro. So you have to wait and see. But right now, we think the U.S. cyclical picture is going to be the bigger driver of the dollar, but it's not going to take it very far weaker.
And in terms of these steeper yield curves globally, where should we watch out for the curve the most now? Is the front end pretty well anchored at this point, given what people are pricing in terms of Fed cuts? Where to look at in the curve now?
For the moment, we think that the front end is, the market still has a little bit more to price in at the front end. For arguing for 50, the market has about 28 for September. I think at the long end, we're so close to 4. We think that there's more upside at the long end. Especially as 2025 ends. That this is like the last opportunity to, take advantage of a low yield environment before things begin to back up. Because we do think that the U.S. fiscal situation is serious, and as is the global one. So we think ultimately, the bond vigilantes are going to win, but at the same sort of time horizon where we think we could have a bit of dollar weakness, we could have a bit of lower bond yields. But as we get towards the end of the year, we expect both higher yields and more dollar, the dollar to rebound a little bit.
Stephen, it's great to have you. Thanks so much for joining us on a Sunday night. Stephen Englander there, Global Head of G10 FX Research at Standard Chartered Bank. We got plenty more ahead. This is Bloomberg.
Welcome back. You're watching The China Show. We're looking at some pockets of this equity market across the region. We're sticking with property, at least for now. So a glance at some of the REITs in Seoul. This is after a policy push from authorities to maybe take some steps to cool the property markets. Not a consistent theme and reaction across this, though. Although when you look at this next board coming up, I believe it's all rise for Chinese Shenzhen property stocks specifically. There we go. On the back of the city easing home purchase rules. To be more specific, Shenzhen will remove home purchase restrictions for both local families and those without the hukou, the local household registration, who have paid, at least if you made contributions to your Social Security or individual income taxes for at least a year. That's across 6 districts, and that's playing out across the equity market very quickly. Metal stocks are doing this. And the story there is one that draws a line to the White House and the tariff exemptions as it pertains to, of course, that neck of the woods.
Yep, so certainly that's one to watch, the metals, and of course we're watching the energy players as well. Take a look at when it comes to Brent in the last 2 days or so. So certainly that surprise that you could say what happened over the weekend here. There was some initial reports that OPEC Plus might actually be doing that. But yes, speeding up that return of next year of halted oil production. That's the headline across your terminal here this morning. Let's bring in our Asia Energy Team leader, Stephen Sapchinsky. So yet again, we're seeing a production boost from OPEC Plus. Can you walk us through the rationale this time around?
Yeah, I mean, I think first off, I want to look at the move itself, but it was certainly like a shock, but no awe. Like, I think when you looked at the analyst surveys that we did, most weren't expecting OPEC Plus to actually increase output. They were expecting them to keep it steady going into next year when they were when they had initially said they were going to unwind by the end of 2026. Now, the reason, probably twofold, right? One, the official line from them is that they do see some need in the market for more oil. I mean, they do see that increasing it wouldn't have a big enough impact on the market, and in fact it would be positive for providing the oil for their customers. The second thing, which is more speculative, but something that is viewed widely in the market, is that this is OPEC Plus trying to get back market share, specifically Saudi Arabia. They have the most curtailed supply of any member in OPEC Plus. They are the largest producer, of course, but at the same time, over the last few years, as they had cut back supply, they had lost some market share to a degree from U.S. shale drillers. Now, as you see prices driven down, you are seeing some of those shale players maybe look at reducing their output. There is a lot more pressure on that incremental supply. You saw Conoco shock again, another shock with the market going to say that they're going to cut their workforce by 20 to 25%, and they're a major U.S. producer. So all those things together, you could say, are reasons why OPEC Plus decided to do this increase. But again, while it was a shock, the awe part wasn't there because it wasn't really that big. There was some expectation. People were hedging their bets that they were going to maybe announce something on Sunday. They love to surprise the market. But at the same time, 137,000 barrels a day is less than what they've been adding to the market in the previous 2 months, and it wasn't a huge amount where you're seeing a collapse in prices. In fact, maybe there's a bit of relief with oil up a bit today.
Yeah, I mean, Goldman actually came out with a note, I believe, and I could be mistaken, I believe before the OPEC Plus announcement came over the weekend, and their thinking was already lower oil prices because of higher supply, and I wonder right now whether we should be operating under the assumption that price range is now shifted even lower as far as the global oil price is concerned.
You know, I think what's actually interesting is that there's what the analysts view, which is that we're heading into a pretty large glut for the oil market at the end of this year and into next year, versus view from OPEC Plus that is, hey, demand might be actually a bit more resilient than you think, and we want to add some more barrels to the market. Now, I think that there is an expectation that we will drift lower. Analysts are seeing that, Goldman says we can fall into the $50 range from around $65 for Brent right now. We are maybe at a technical floor, so it might show some resistance where we are at the moment. But as those barrels potentially enter the market, we're going to see the reaction. I think another thing that people are looking at is, yes, OPEC Plus said they're going to raise supply, but what does that actually mean for physical oil on the market? Because OPEC, there are some members of OPEC who are already producing over where they're supposed to. So the increase is more of a technical sort of move by then. It isn't. Some suppliers aren't able to increase at all either. So will they actually add a lot more to the market, or is this just some members playing catch up and others are unable to meet where their targets are? Is yet to be seen. So there is also a view that, yeah, we said 137,000 barrels per day, but will that actually result in more on the ocean?
Stephen Stapczynski, thank you so much, sir, our Asia Energy team leader. Coming up in the next hour, Bloomberg TV, in fact, we'll be hearing from FGE, the chairman emeritus there, Ferdinand Fesharaki, will be joining us to help us understand really. And you know what? Every time I read an OPEC Plus story, I still am confused at the very end of that, whether or not more barrels have been added or not. And it's all still very, at least to me, still. And hopefully we get more clarity from Mr. Fesharaki coming through later today. I'm better off there after Stephen Stapp, just to mention that. This is Bloomberg.
Here are some of the stories we're tracking for you this morning. Vietnam's VinFast has launched its first EVs in India. The compact VF6 SUV starts from about $18,000, while the VF7 midsize SUV is priced about $22,000. That's about a third the price of Tesla's Model Y in India. VinFast says the pricing is introductory and limited to the first 1,500 cars it sells, or until November 30th. China is reportedly preparing to resume its domestic bond market with top Russian energy companies. The Financial Times says Chinese regulators told Russian energy services that they would back plans to issue yuan-denominated panda bonds. If finalized, this would mark the first time a Russian company has raised funds in mainland China since the 2022 invasion of Ukraine.
Oh, well, speaking of bonds here and potential spreads, yuan bonds on your screens, the curve there, 2 to the 30, and we're looking at slight steepening. No, we're slightly to the upside, let's put it that way. But yes, we could be slightly steeper if you squint your eyes there. So 2.10%, and again, at 1.8% handle, the 10 yield is one we're tracking very closely. One stock that has been in focus over the last, let's call it, year or so, PopMart. So we're down the most since May. We're down about 7%. So effective today, I believe it's part of the index. It was announced, of course, a few weeks ago. The other thing to note is perhaps on technicals itself, and you have to bear with me, the perhaps next level to watch is your 50 DMA, which is currently about 9 Hong Kong dollars below the current price. So it's called $10 still to the downside before you hit that support level, which also happens to coincide with that level before that massive pop that we got back in on August. I'm just looking at my charts, so bear with me as far as that's concerned. Okay, Cambricon was down substantially late last week, was rallied then on Friday, and as you can see, we're giving back, of course, those gains from Friday. We're down about 6.4%. I guess this is one of the proxies, if you will, across the equity market rally on the onshore space, and Akeso is one stock to be tracking.
Yeah, so dropping the most in 3 months. There was mixed drug data from the U.S. partner there when it comes to Summit Therapeutics, so stock down some 6%. This is Bloomberg. All right, 11:29 a.m. in Tokyo. Japanese markets heading to that lunch break as well. We're continuing to see this rally in the equity market here on the back of what we heard, right? So the Prime Minister Ishiba has announced that he will be resigning. And now we're talking the next thing to watch, which is the leadership test there. And certainly who's going to be the likely contenders to replace the Prime Minister. But equity markets are taken in stride. In fact, they're saying, maybe this is a means of what happens, of what the BOJ might delay that potential rate hike that has been priced into these markets as well. Maybe that's why we are seeing continued strength into this equity market. The yen substantially weaker this morning too, Dave.
Yeah, I mean, the reaction in the equity market is similar to what you typically not all the time get when a CEO steps down and then the stock price of the company moves up. And I think the reason I only mentioned that is our guest earlier on, Michael Cucek, who joined us out of Tokyo earlier on, says this is simply the latest iteration of this, what he thinks will remain a revolving door of prime ministers in Japan. So get used to this reality, the fact that, of course, the party don't even have a majority, and they need a coalition there, of course. Right, that's the complication aside. We are looking looking at an equity market that is doing well. A lot of that is down to what's happening on the back of Japan. And as you can see, of course, as it pertains to tech as a sector, we're moving higher there. We're just coming off highs a little bit on the S&P. We were trading at about 6,500. We're coming off about 4 points. The dollar is stronger, and I can probably can thank the weak yen for that move up in the U.S. dollar.
Yep. So one thing to watch, of course, when it comes to geopolitics and the like, Brazil is holding a virtual meeting of BRICS leaders later on today, and on the agenda is President Trump's tariffs, but also a bid to rally other emerging markets nations to support multilateralism. Now, BRICS, of course, as we say, stands for Brazil, Russia, India, China, and South Africa. And the group accounts for about 40% of the global economy and roughly half of its population. It's doubled in size in 2024 to include the likes of Iran, UAE, Ethiopia, and Egypt. Indonesia, as well, was also admitted earlier this year.
Yeah, and what does a larger BRICS mean for the world? And also just to also insert there, BRICS and SCO and, do those two things certainly overlap. There's one now supersede the other. In any case, as far as BRICS is concerned, the addition of major fossil fuel producers may then give the bloc more scope to challenge the dollar's dominance when it comes to transactions for oil, gas, switching to other currencies, certainly a concept referred to as de-dollarization. Now, Beijing is also trying to build an alternative world order to challenge U.S. hegemony as a counterweight, a lot of fancy words here, to the G7. In fact, Chinese President Xi Jinping is slated to address the virtual meeting today.
Yeah, for more, let's bring in Duke Kunshan University's American President and Executive Vice Chancellor John Quelch joining us here and flying into Hong Kong just in time. John, it was great to have you here on the program. Obviously, we've been talking about, this is coming off of a very, pageantry that we saw in Beijing, where there was this SCO, the military parade, and now we're continuing this momentum for BRICS. What are you expecting is going to be kind of the tone and message coming through this kind of virtual meeting?
It's interesting that President Lula has called the virtual meeting because, of course, he and Brazil were not in Tianjin and not in Shanghai, whereas Modi of India was in Tianjin, skipped Shanghai, skipped Beijing, the victory parade, but was in Tianjin for the SCO meeting. So I think there's a little bit of a sense that Brazil does not want to be left out of the equation. The SCO is very much a Belt and Road Initiative, Northern Hemisphere grouping, whereas, of course, BRICS includes Brazil and South Africa. And I think it's important for Brazil in particular to be reasserting itself and reasserting the agenda items that it considers important. So that's why I think they've called the call.
Economically, are you seeing stronger ties? Between China and the likes of Brazil, for example, in terms of the U.S. pushing these guys all together?
Certainly in terms of agricultural commodities, Brazil has been, in a sense, a godsend to China, with soybean sales having pretty much collapsed out of the U.S. and Brazil taking up the slack. And I think that has been reciprocated in terms of the level of trade interaction and investment interaction we see between China and Brazil. But Brazil has to be quite careful here in terms of balancing its outreach to China, but at the same time keeping a good relationship as much as it can with the United States, though, of course, we currently have the Bolsonaro trial about to begin in Brazil, and Washington has made a few moves against the judges associated with the Brazilian Supreme Court in terms of visa restrictions, and that has not gone over very well in Brasilia.
How much further can we see a deepening of ties then within the BRICS when of course, we talk about the political divisions among the BRICS themselves?
Yes. So to the extent that President Trump and Washington tariff policy is kind of inflaming emotional reaction on the part of the BRICS nations and the global South in general, that, of course, is giving them something to collaboratively fight against. Yeah. On the other hand, as you correctly point out, there are very, very many differences of opinion and divisions among the BRICS nations. Take India and China, for example, despite a sort of 5-minute rapprochement in Tianjin, there is a long-standing difficulty between India and China.
So is it just optics, you think? Or do you think what we've seen in the last week or so is an inflection point in what China and Xi Jinping has wanted, is this shift in the global world order?
Well, I think President Xi and Beijing orchestrated the Tianjin event, the SCO event, as well as the 80th anniversary event extremely well. And so to say it's an inflection point, I don't think is true, because frankly, real politics and real economics are going to come into play here, and there's a balancing act going on in every capital city of every BRICS or affiliated nation at the moment, where they have to try and cope with the U.S. situation, the level of indecision and flip-flopping that we occasionally see, versus at the same time the new reality of China's increasing importance in the global economy. So how to balance those two forces is something that every leader of every significant global South country is wrestling with.
And their business leaders, to your point, this eventually goes back to real economics, right? Businesses value predictability. I think at some point this morning we're getting the August trade numbers out of China. The reason I bring that up is I understand you were recently in one place in China that does specialize, Yiwu, which does specialize in making things basically for the world to purchase. And I remember covering that city, and it used to be known, I'm not sure if it still is, but the Christmas capital of the world. That's where the gifts are mostly manufactured. What have you seen on the ground? Have businesses there shifted to BRICS, SCO, Belt and Road, whatever you want to call it, of course?
So Yiwu is totally different now from what you just described. It's way beyond Christmas ornaments. It's industrial products. It's robots. It's everything that you can imagine. Durable goods, consumables, trinkets, very small percentage now of the total throughput at Yiwu. Number two, around about 80,000 merchants in Yiwu, in the 7 trade centers that they have there. There are 10,000 foreign buyers resident in Yiwu, apart from 600,000 foreign visitors a year coming in.
Wow.
I talked to 6 or 7 merchants in Yiwu, small store owners in the marts. And what they told me was, as far as the U.S. is concerned, not really having much of an effect, the tariffs not having much of an effect on them, because, a couple of years ago, these very agile merchants already pivoted to BRI, Belt and Road Initiative countries, Global South, other markets. And so the highest percentage that I could uncover among any of the merchants in terms of U.S. sales out of their particular operation was 10% still going to the U.S. And this was from a store which is essentially selling high-end product to higher-end product to the likes of Target and Disney.
I was going to get your take on what you're seeing in the higher education side of things.
Yeah.
Duke Kunshan, of course, this is a joint venture between Duke University and Wuhan. What have you been seeing in terms of student enrollments, and maybe international sort of student interest?
So our enrollments this semester were very, very high, higher than we expected. We had a over-enrollment maybe around about 20% among international students accepting our offers ahead of what we expected. And this we attribute to the fact that Global South applicants who might have applied to the U.S. universities as well as to us ended up coming to us because of visa uncertainties, post-graduation employment uncertainties in the U.S., and the general climate of perhaps a less than safe environment for foreign students in the U.S. university campuses.
Do you get a sense that that's simply for this year? Is this an opportunity for the school to then be able to corner this part of the market that, clearly has revisited this option and is now taking advantage of it.
Yeah, so obviously from our point of view, we're developing a truly international university. From our point of view, those students who have come to us this year are going to be the ambassadors for the next intake next year, and so we hope they'll all go back to their school counselors and their classmates 1 year behind and say, this is a great option, you should come to Duke Kunshan.
There we go. Yeah, and Professor Quelch there will be welcoming you, of course, if you... There we go. Duke Kunshan University Executive Vice Chancellor John Quelch there. We're hearing now, by the way, that, and just speaking of, the virtual BRICS summit will begin, what time is it now? 10:40, 8 p.m. Hong Kong time. So that's more than a couple of hours away, but yeah, stay tuned for that, of course, and that's according to a government official out of Brazil.
Yeah, if you're a subscriber, of course, you can rewatch that interview or so watch everything that we've been talking about on the show here on an interactive TV function, TV Go. You can become part of this conversation, send us instant messages, questions for our guests throughout the shows. Check it out at TV Go. Okay, we're checking FX here this morning, and certainly the yen has been weakening here on the back of what we've been seeing, the political turmoil that's happening in Japan. But really, there's a lot going on, whether it's in Thailand here, the new leader taking office after the king's endorsement. Also, when it comes to that confidence vote in France, it's happening a little bit later on as well. So euro-dollar is hovering around that 117 level here this morning. So we're watching multiple movements in several capitals this morning. As we've been discussing, Japanese Prime Minister Shigeru Ishiba is stepping down and paving the way for the election of a new leader. And in Thailand, conservative Anutin Charnvirakul has been taken office as the country's third prime minister since 2023. Meanwhile, as you say, Prime Minister François Bayrou is set to lose his premiership in a confidence vote in Parliament on Monday.
Okay, on those three stories, let's bring in our team, our coverage of these three. Joining us now is our Japan politics and economics reporter Sakura Murakami. Out of Tokyo, out of Bangkok is Patpicha Tanaka-Simpipat, and here in Hong Kong is our senior news desk editor Balaz Pen to talk us to the European angle to this. Sakura, I'll start with you in Tokyo. Well, if for those that perhaps might have missed it, why did he step down, Prime Minister Ishiba?
So things weren't looking great for Ishiba initially. He had some very bad election results recently, and there was momentum within the party to see him stand down. And that kind of came to a head over the weekend when surveys were showing that a lot of people in the LDP wanted to see an early race, and he was kind of losing the momentum, losing the confidence in his party. So he announced yesterday evening, that he would stand down.
Okay, everyone's talking about successors. Who are going to be the top contenders to really watch out for to replace him?
So there have been some people there have been reports of some people planning to actually throw their hats in the ring for the leadership race. So far, Toshimitsu Motegi has actually announced his intention to run as a possible successor. But the main focus is on Sanae Takaichi and Koizumi Shinjiro. And so they bring very different things to the party. Takaichi appeals to the right-wing vote. She's more of a fiscal stimulus kind of person. She would be the Japan's first female prime minister if she's elected. So she brings that to the table, whereas Koizumi brings more of a fresh energy to the LDP. He's very young. He's 44. He's the son of a reformist former Prime Minister Junichiro Koizumi. So he brings this kind of rebranding, a kind of fresh energy to the party.
All right, Sakura, thank you. On the latest on Japan here, our politics and economics reporter, Sakura Murakami. Let's bring in Patpicha now in Bangkok, where investors are watching the cabinet picks made by the new PM. Patpicha, tell us a little bit more about what can we expect from the cabinet formation.
Yvonne, after Anutin was voted Prime Minister on Friday, he has made quick he has made quick moves to form his new cabinet. So far, he said that the lineup is nearly finalized, so we should be able to expect to see the full list within the coming days. What we know so far is that Anutin will double as Interior Minister, which is a key position seen as important to securing success for the next election. He has also tapped a few technocrats for key government positions, such as Ministers of Finance, Foreign Affairs, and Energy. Anutin said that he needed these experts outside of politics to be brought in so that his government can hit the ground running, considering that he has only pledged to stay in power for only 4 months as part of a deal with the People's Party, the largest bloc in parliament, that voted in support for his premiership last week.
Do these appointments tell us anything, Patpicha, about the priorities over the next 4 months? Call it quite short, of course.
Sure, David. Anutin said over the weekend that his priorities are going to be short-term focus because he's only staying for 4 months. At the top of his list is economic issues. He said that he plans to reduce high costs of living, including energy and transportation costs, and also tackle household debts of farmers and low-income households. And also he plans to take steps to peacefully resolve the Thai-Cambodian border crisis without losing any more lives or compromising Thailand's sovereignty. And in the speech yesterday, he also reiterated his promises to the People's Party, which helped him secure the premiership, that he will dissolve the House of Representatives within 4 months and call new elections, as well as hold a national referendum to amend the constitution before he goes.
Right, Patpicha Tanakasampipat there in Bangkok for us on the latest on the Thailand front. The other big front, of course, is in Europe, and it's going to get fairly busy these next 48 hours or so, certainly in France, where you look at the Prime Minister there, could lose his job in a confidence vote. I believe it's later Monday. Let's bring in a news desk editor. Balazs Pence is here with us to talk us through there. Yeah, so what are we watching in France today?
Well, it looks like there might be some sort of a resolution to this episode in what's become the annual French political crisis. It looks likely that François Bayrou will lose his job, but that's only the beginning, and what comes next could be even more calamitous for French assets. President Macron has a few options in front of him, and none of them promise a quick resolution, as the underlying issues remain, which are a fractured parliament and a rising debt, a rising budget deficit, which needs to be addressed, and that's what Bayrou has ultimately been unable to do. So whatever Macron chooses to do next, whoever the next prime minister is, he or she will need to contend with the exact same forces. The other option for Macron would be to call an early election, which would threaten to strengthen the far right, which would threaten to even shrink his own constituency even more. So that might be even more unpalatable for the president.
Okay, the UK is also going through quite a bit as well. I mean, there's this wide-ranging reshuffling of the government, and the Prime Minister there is really kind of changing up the narrative. He tries to, at least. What's next there?
Well, Keir Starmer is doing the classic politician's gambit. He's trying to turn a moment of weakness into a moment of strength. He has to respond to the resignation of the Deputy Prime Minister, and is trying to rebrand this as sort of the phase two, the next phase of his government. So what he's trying to do is he's trying to focus on the two issues that have really propelled his main challenger, the Reform Party, immigration and the economy. But at the same time, he will also have to watch his back, because there will be an election within his own party for the deputy leadership position, and some people think that might be a beauty contest for somebody who might eventually replace him.
Okay, Balazs, thank you. Balazs Pence there, our senior news desk editor, on what to expect when Europe wakes up here this morning as well. And of course, the political turmoil in France adds to really the list of risks for your week ahead here, when the ECB also meets on Thursday. And there's a growing amount of people, economists, Dave, that are expecting that they're going to have to stay on hold, just given the political crises that we're seeing in France, for example, as well.
Yeah, we're waiting to hear as well from what Madame Lagarde, if she will discuss this at length and elaborate really what the ECB stance is, particularly as you look at maybe iteration of this in markets and how this affects this really melts up in longer dated bond yields, right? Apart from this, when you look at the Chinese market, at some point this morning, if not soon, we'll see. Trade numbers are set to come out for August, and then the midweek session is arguably, in my opinion, perhaps the bigger one there as far as the CPI print inflation numbers coming through out of China is concerned. In fact, Goldman Sachs put out this note on the weekend, the 3 things on China note that they put out, and basically said the anti-involution conversation might actually lead to the first month-on-month increase as far as that's concerned. Plenty more ahead. This is Bloomberg. Welcome back. Before we wrap up the China show today and before we sort of fade into the background, just a look at some of the big movers, and certainly not an exclusive list. There's a long list of sector movers today. We're starting things off, as you can see, in robotic stocks related there. So as you can see, we're on the up. This putting down to the release of this Tesla robot as a catalyst as far as that's concerned. Horizon Robotics, of course, has been very much in focus, not just because of today, but certainly the broader trends as far as the developments are concerned. Right, point number one. Point number two, PopMart down the most since April. And in fact, this is perhaps on a day when it is getting included on the Hang Seng Index. Was announced a few weeks ago. Plus, of course, broadly speaking, some of the big winners have been feeling the pressure to the downside. I think the 50-day moving average might be very much in focus. I think that's coming up on your screens very shortly. What that level is, it's a 275, I believe. There we go. Is it 275.63? That should be it.
Yeah.
There we go. Thank you.
The short sell turnover also spiked to a record level on Friday, mind you, as well. Some of these sort of darlings in this market are certainly coming off. You could say that about Camericon here as well this morning. But yes, HSI is looking like this right now. And yes, it looks like we're going to be heading to Typhoon 3 soon. It looks to be lowered at about 1:10 p.m. Hong Kong time. Hang Seng market flat this morning. This is Bloomberg.